So DraftKings delivered another 10 out of 10 earnings, and Wall Street seemed to like it as the stock was up over 15% on Friday. And as we always do on this channel, we're going to break down these earnings and we're going to look at the good and the bad of these earnings. Obviously, mostly good because the stock is absolutely smashing it at the moment. And also congratulations to any of you guys that have been through the pain with the stock in the last 12 months. You're starting to see some of the rewards right now, and this is in a bear market. You imagine when we have the indexes at all-time highs and this company continues to smash it in the next few years, it's going to be really exciting where this company is going to go. So it's been really good seeing all the bears struggling at the moment. They're like, oh, well, it was supposed to go to $1. Well, now this is the reason it's going to go down. They're trying to find reasons that this stock isn't going to work out, and they're struggling, and it's very good to see. People think that these bear markets are going to last forever. They don't last forever. You want to be on the bullish side. Bull markets very much outlast bear markets, and you always want to be long as well. You know, being long, the benefits of being long is that your return can be over 100%. As a bear, what are your returns limited to? It's really to 100%. You know, that would be worst case scenario going bankrupt. So why would you want to be on the bear side? And obviously the reason why people are being on the bear side is because we've had this negative market, and people are emotional and follow the share prices, and people have been following these share prices down for the last 12 months thinking they're going to last forever, just as much like how before we had the bear market, we had the bull market, and people think the bull market is going to last forever and just keeps going up. And this is why it pays to be patient. If you're patient, you'll get the rewards, and this is a snapshot of them rewards, and I'm sure even more in the future you'll have even more rewards. Anyway, let's get back on to DraftKings. So yeah, obviously really good earnings, 10 out of 10 earnings, and we'll start with the negatives actually first, then go on to the positives. But the negatives, this is me being really picky on the stock. There wasn't really many negatives, and this is, like I said, me being really picky. There weren't major standouts. So first of all, EPS. So the EPS came in at 0.87. Now, obviously, this is a beat. It wasn't a huge beat, and I would have liked to see maybe if they could beat a little bit more than that. But hey, you know, it's a beat on the EPS. I'm just saying that maybe it could have been even a bigger beat. That's me just being really picky, like I said, on the stock. There's far more positives that outweigh what's going on here, especially when you look at the guidance, which is more important. The next thing, the second negative that I only had from this earnings report is no mention of New Jersey. Well, there was actually a mention of New Jersey, but not what I was looking for. So once again, this is me being really picky, and on the investor day, I'm sure they'll actually do this, to be fair. But I always like when they mention New Jersey. The reason why I always like them hearing about, or them speaking about New Jersey, is because New Jersey was their first state they launched. I think they launched it in either 2017 or 2018. I can't remember now, but they launched it there. And I always like hearing how New Jersey's doing. The reason why I like hearing how New Jersey's doing is because that is the most mature state that DraftKings has. Basically, DraftKings has only been a proper business how it is right now for 5-6 years. So we look back at New Jersey, and New Jersey is our indicator of, okay, in year 2, this is what it's doing. Year 3, this is what we're doing. Year 4, this is what we're doing. And then when the other states get to that point, what New Jersey's at, you can kind of guess what they're going to do because of the historic of New Jersey. Now, New Jersey is the example of why DraftKings was always going to be a successful business, because it was a state that continued to grow revenue. And even last year, we heard that this state was still growing. I think it was something like 30% revenue growth, which is absolutely crazy to say. It's still, you know, it's classed as a mature state, and it's still growing at them sort of rates. It's absolutely bonkers. And we also heard that it came profitable after 3 years, and that was the indication that DraftKings will eventually get to profitability. Obviously, the bears don't really do that much research, and they don't listen to that, and now they're being caught out by that. And everyone that has actually been doing research on the company, it didn't take a genius to realise this was going to happen to all the other states. But what I'd like to hear about New Jersey is that last year I heard, obviously, that they're still growing at really good rates. Now we're entering New Jersey, I think in its 6th year, we'll have a good idea what the revenue growth is still in that state now 6 years on from launch. That's what I just wanted to hear. Now, like I said, it might come up in Q2, Q3, Q4. It might even come up on the investor day that they're going to have. So that's me being ultra picky on that one. It's not something that is obviously there to be released, but I always like keeping track on how that's doing. And then when the other states get into their 5th, 6th year like New Jersey, I have a good estimate on my numbers where a lot of the company and states are going to be as it matures up. So anyway, really picky point, as you can see. Now on to the positives. Once again, I started to run out of room to put all the positives down, so apologies. I'll try go for the best ones or the most important ones. There was a lot of positives on there that I've mentioned before, so I didn't feel the need to put them down as much. Things like someone on the conference call asked, do you need any more capital? The Jason Parks replied, no, we don't need any additional capital. We've had that question asked on the last 2 conference calls and we've covered it before. So something like that I didn't feel the need to put down on the whiteboard, but you could easily put it down, for example. So the positives. Revenue, 84% year-over-year growth. This is very good. It was 770 million versus 704 million expected. This is far growth ahead of what was expected and a major beat. And this isn't sacrificing any sort of the profit side of it. It's not with big growth of sales and marketing. This is all down to DraftKings, and now they are reaching more of a mature and scale point of view where they're really benefiting from this revenue growth. The other states are still growing rapidly without having them to put up sales and marketing. We're seeing the benefit of them now coming more of a national company and the national ads being used. So when DraftKings do launch a state, the uptake is so quick on there and it just coming more mainstream basically. And that is very clear on the revenue growth. This was, this is scary how good this is. So unbelievable once again. This was the headlines. This for me should have got the stock up 10-20% on its own. I could have argued the shares could have been up even more on this. Break even in Q2 for EBITDA positive. Unbelievable. This is scary how good this is. This was not supposed to happen until Q4 this year. Now you guys might remember on the last earnings, I said that they might get to EBITDA positive in Q3. The reason why is because the sales marketing is normally a bit heavier on the front of the year compared to the back end of the year. Now, I did not expect them to do it in Q2. So this is really good that they get in there even ahead of schedule, 6 months ahead of schedule. We're talking about within 2 months, we're going to have a company that's EBITDA positive. We're going to have a company that's not burning through the cash. This is game over for the Bears. It's game over. The biggest negative that the Bears have always used against this stock is it's going bankrupt. The cash burn is crazy. They're going to need raised capital. It's gone. In 2 months, the big case that the Bears have had against this company is gone because the cash burn, they're going to be EBITDA positive. So there's obviously some factors that we want to see them now move into cash flow positive, gap profitability. That is the next step to go forward and it will get there. But this is the first stage of DraftKings proving a lot of people wrong because they said they couldn't get there. They're now here. Now, I wouldn't be surprised to see people then rotate to going, well, they're not cash flow positive or they're not gap profitability. And once again, we'll see it. The writing's been on the wall. We talked about New Jersey a little bit earlier in the video. That got profitable. It was the example that all the other states are going to start maturing in the second, third year. They're going to be profitable. And once they've got a good cohort of states that are profitable, they're going to be EBITDA profitable. It's happened now. They're on to the next step and they're going to keep moving up more and more and more. This is, boom. This is game over for the Bears. That was unbelievable. Like I said, that's a 10-20% jump on their own. Never mind with the revenue here. Going on to the guidance. So they hiked up the revenue guidance by, I think it was 200 million, which great once again. EBITDA as well, negative 290 million. So that was upgraded from, this is the low point by the way. This was upgraded from 350 million. So this is a very good upgrade. So once again, we're seeing those losses start coming down more and more and more, which is great. And also, I actually should have put this a little bit higher. What we expected in Q4 was them to be EBITDA positive. They're actually coming in now and saying that when they get to Q4, they're going to put in 150 million of EBITDA. Unbelievable once again. And you compare that to this here. So at the moment, they're expecting on the low side now to be at 290 million in EBITDA. Now in this quarter, they did lose 221, but they're expected to lose 290 million for the year. Now if they're going to get break even in Q2 and then they're going to put in 150 million EBITDA in Q4, that only leaves Q3 what potentially EBITDA they're going to be putting in. That's the question mark. Now looking at this here, I think there's a little bit of snowballing here where they potentially could be upgrading that a little bit more through the year, because to me those numbers don't add up. But really good to see EBITDA losses coming down once again, upgraded, and we're seeing once again even in Q4 we were expecting break even. We're now talking about 150 million, which is absolutely scary to see. Monthly MUPS was up 39%. I think it was like 3 quarters ago that people questioned monthly active users on DraftKings, and it caused like a 20% drop on their earnings. And yeah, I mean, obviously, that's obviously put that one dead that the Bears had as well once again. Average revenue per user up 35%. People are spending more and more money on the platform. That's really good. It seems like there's a lot more cross-selling now going on between the sports betting part of the platform and the iGaming part of the platform, which is really good. 2 new states coming, Kentucky, Puerto Rico. I think that's another 2% of the population. It's going to be really exciting the day that something like a Texas or California gets added on. You know, that'll be a really big revenue driver when that does happen. Or iGaming in more and more states. G&A, that was down massive. I was really impressed about the efficiency. You know, it's a kind of a buzzword at the moment. A lot of people are trying to squeeze in the conference call is efficiencies. But you're actually seeing at the moment like the efficiencies and the cost cutting coming down on DraftKings. I was really impressed with the cut down on the G&A, and obviously that's probably one of the key drivers why EBITDA is looking so much better as well. Stock-based compensation, it was down once again massive. This is one of the biggest criticism once again that DraftKings has had. That was down massive. Hopefully as that carries on coming down, that'll be really good, and obviously that is one of the big things that will actually push them into cash flow profitability. So obviously that's really good. I've got no problem with a growth company playing stock-based compensation. A few people make a big deal out of it. It's a common theme for a growth company. In fact, profitable companies do it as well. But it's good to see them actually bringing that down, so that was really good. We talked about that 150 million EBITDA in Q4. That's absolutely crazy. This was impressive. I just mentioned there, you know, obviously they acquired GNOG. It looks like GNOG is really starting to ramp up a little bit now, and that cross-selling that they're going to have between sports betting and iGaming. iGaming as well is a really important part of the platform because iGaming is historically a lot more profitable than sports betting, and also with iGaming, there's a lot more states to still come online with iGaming as well. Now in iGaming, they actually took the number one share on GGR, and that was 26%, and they actually overtook BetMGM, which is actually scary because iGaming isn't supposed to be a big part of the sports betting for DraftKings, but at the moment they really are delivering on the iGaming as well. So that was a really impressive to be overtaking BetMGM. Next thing, 600 points improvement on the gross margins. You know, one of the big things is that we don't want to see DraftKings slumping down on the gross margins. I think there was a point where they actually dipped into the 30% range. My long-term target was always for DraftKings to enter into the 50% gross margins. Obviously, it's in I can't remember what number it is now off the top of my head. Is it 40? Is it 45% they've just put in? I can't remember. It's 40 something. I think for the target is like 42, 45%. But obviously the aim was to get up to a 50% gross margins, and then in the long term, if they can start pushing up with that 50% gross margins and turn that into a 10% profit margin, that'll be absolutely amazing. So they are really delivering on the gross margins improvement as well, and that will only continue as well going forward. 800 million cash left when EBITDA positive. So obviously they're not going to need more cash. They're not going to be burning through any more cash. And the feeling is, or the numbers that are coming out now, is there's going to be 800 million left on that balance sheet. That's a really good cash balance. 800 million to be left on that balance sheet is super good. Now, I think previously the estimates was to be somewhere like 300 and 400 million. I think that then got up to 600 million, then 700 million. And now we're up to 800 million cash left on the balance sheet. So that's also considering that I think there could be low bowling this number as well around here when we talk about break even in Q2 on EBITDA and Q4 positive 150 million. I'm looking at this here, and I'm actually looking at the 800 left, and 800 million. I think it could be a little bit more than that, but even so, strong balance sheet that's going to be left over when they do start hitting towards profitability now, which is great. There also was the suggestion that, and we'll probably get a lot more detail on the Investor Day, that states are still getting faster at growing. Like the revenue that when a state comes online, the revenue they're generating is more than previous states. And that's an example where people, obviously the national advertising and the awareness out there that's kicking in, but also now that probably they're traveling to other states and they're going to their friend's house and they're watching maybe a sports game, like, oh, do you not have DraftKings at, Kentucky? No, we don't have it. Oh, well, you can have it here, and then download it and then use it. So that's obviously one of the big things that's actually happening at the moment that's really good on the growth point of view. And the other thing is, because of the revenue growth being driven forward and the efficiencies now becoming more of a national company, that all the states are getting profitable quicker as well. And that's clear on when you look at the EBITDA numbers as well that have been coming in here. So the numbers here are clear that's going on. So you've got a company here that is doing everything it was doing before, and now even better, which is a scary thing. So this was a really, really good earnings from DraftKings. Another 10 out of 10. I mean, 11 out of 10. It's absolutely fantastic what this company's doing, and this is going through a period of time, this recessionary environment that we're in, this high interest environment, and it's holding up so strong in this environment. Now you imagine when the stock market's at 52-week high, when the economy is doing very well, imagine what this company is going to be doing. Like, it's actually scary when you look in the long term and you think about all these states now, when you look at the likes of New Jersey and the growth that that's still putting in, the profitability that's coming in the long term. When you look at this company in the next 3, 4, 5, even up to 10 years, it's actually scary where the levels of potential is for DraftKings. It's got a very, very good future at the moment. So yeah, obviously fantastic, great numbers. Well done for anyone that's been buying DraftKings or holding DraftKings, especially through the storm of the last 12, 18 months. Friday is definitely a day that you deserve, and congratulations. And that's the video for today. I'll see you all on probably Monday. I'm probably going to have Sunday not making a video on the YouTube channel, but I probably will drop a video on the Patreon anyway for you guys that are on there. So yeah, hope you have a good weekend. Catch you in a bit.